The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, there continues to be plenty of discussion across farm country and throughout the ag economy with lower commodity prices and higher costs of inputs. Where do we tighten up the belt a little bit? There is some uneasiness out there across farm country right now. A new report from Rabobank examines that, tightening the corn belt, how U.S. farmers adjust input spending when commodity prices fall. Here to talk about the report with us, he is senior analyst for grains and oilseeds with Rabobank. Owen Wagner is with us here on the program today. Owen, thanks so much for joining us. Hope you're doing well.
I am doing well, Jesse. I appreciate the invitation.
Well, let's examine this a little bit. And just, I think for starters, maybe give us an overview of the new report and the new research you are working on here. A lot of farmers are very, very much on edge, I would say, with how commodity prices have taken a step back, yet input prices remain high. A lot of different things going on here, and it feels like a lot of folks are preparing to do a sort of a balancing act, so to speak. So overall, what's the synopsis of what you're seeing? Talk about this new report for us.
Yeah, we're in an unfortunate part in the cycle, and we all know that ag markets are cyclical, right? And we are at that kind of going into the trough. We've just been visited by sort of the four horsemen, if you will, of falling prices, fundamentals, obviously monster crop on the way this fall and this harvest season, and farmers are sitting on pretty big stocks from last year. We've had some unsupportive biofuel policies delivered our way here in the last 18 months. Managed money has exited the sector, which has been a bit of a drag. We're really just being hit on all fronts. So it felt like a timely discussion to be having. We've seen this before, like I said, in prior cycles. 13-14 was a great example of kind of going from those record highs to lower lows in a fairly narrow time frame. So a lot of, I think, ghosts of that prior cycle sort of revisiting us this go round. And what we've seen from these prior cycles is that farmers, their first course of action is going to be to cut costs. So that's was really the focus of this report, was to look at the various input categories, see how expenditures were adjusted when revenues went down, but also dive a level deeper and say, okay, expenditures being a function of both price and volume, and how does that split out, across these things like machinery, seed, chemistry, land, you name it, the sort of the big inputs that are involved in farming.
Let's talk about some of those individually. Was there one area in particular that you are seeing already some tightening, whether it be seed, crop protection, machinery, fertilizer, land, you name it? Is it an all across the board kind of situation? And what are you finding here right now, Owen?
Yeah, no, I think what's really interesting is how these different categories respond differently. And probably the easiest one to explain and understand where the impacts are most immediate are those big capital expenditures like machinery, for example. I mean, the tide has turned on machinery purchases so quickly. You just think about where we were in the wake of COVID and the bidding wars that were involved in used equipment. And now, in certain parts of the country, it's hard to give away old equipment. I'm being a little, exaggerating just a bit here. But in that machinery category, we do see some differences in how markets for new equipment versus used equipment respond. New equipment, you're not going to get any big discounts. They're just going to pull back on volume. And then those machinery manufacturers are going to cut their own costs, of course, by trimming their labor force. That's been an unfortunate side effect of all this. But on the used side, you get the additional, it's not only a question of volumes, but you also have that added level of dynamism in the form of rapidly falling prices. So that's probably the earliest indicator that we've got out there is on the machinery front. But speaking with farmers, only recently we're seeing them get a bit more creative on these categories that tend to be a bit stickier, like seed purchases, for example, for those commodities where they can get away with it, reducing planting density. So cotton, soybeans, wheat, not so much on corn, but on those three prior categories, we're seeing a lot of creative tactics emerging there as well. So different reactions for these different input categories.
Well, and we know that obviously these cycles they come and go. We have times of higher prices and everyone is making a profit, and then we have the downturn of the cycle, and typically these cycles last a couple of years. Where does it feel like we're at currently in this down cycle? Are we nearing a bottom? Are we at a bottom? Do we still have ways to go? I think about this typically, and it's a 3, 5, 6 year type of cycle is what we typically see in agriculture, right?
Absolutely. So I think we are going to be approaching a bottom this harvest in terms of prices, but I don't want to imply that that means that the recovery in prices is immediate. So I think that unfortunately, this environment is something we could be living with for a couple of years. But commodity prices should only go so low. I mean, farmers need to be able to cover those variable costs at a minimum just to have any motivation to stay in the game. Yeah, we are, I'd say, kind of year 1.5 into this cycle at this point, and we could easily see this drawing out for another 2 more years.
Okay. Well, and then as we think about this too, obviously, I hear it time and time again. A lot of farmers they cut some of the maybe additional things first that they like to use. Maybe it's a certain crop protection product or things like that. And it's like we've seen this time and time again, Owen, where we start to maybe cut some things like that, and then we start to lose some yield, and that ends up being kind of the upswing, so to speak, after a few years once we start pulling back on, I guess, what farmers determine to be non-essential pieces of the operation, right?
Right. No, it's very well put. And you hear this sort of the old saying, the best cure for low prices is low prices, or high prices is high prices, because market participants, farmers in this case, will adjust their behaviors accordingly, under those new market conditions. So, I think that one takeaway that we tried to finish with from this report is that, it's going to be a challenging environment for the next couple of years, but we also know from historical precedent that big deals do happen, whether we're talking about at the farm level or in agribusiness. And the implication there is that, while some person wants to pull back because of the difficult situation that we're in, there is someone on the other end that sees this as an opportunity. So I think that that's, even if it may be too late to sort of prepare going into this cycle for some participants, something to keep in mind going forward, that these cycles are, somewhat predictable, as you've alluded to. And that you don't have to be victim necessarily, that there, for someone who is operating profitably, conservatively during the uptimes, these downturns can present opportunities.
Well, I know folks can take a look at the full report, research.rabobank.com, for more information. Owen, as we wrap up our conversation here today, what would you remind producers? I know some of them are going to probably have some tough conversations later this year when they talk with their bankers about, the operating notes and things like that. And a lot of folks are going to be balancing their operating costs and that overall balance sheet and more, and kind of squaring things up probably for a tighter environment. So what would you really remind producers to think about as we move forward through this down cycle?
I would say that, in agriculture, you have some committed partners in agri-finance, and certainly my colleagues that are Rabo bankers look forward to having these conversations. Growers have been in the enviable position here in the past couple of years of being able to self-finance. So I recognize that going into this new environment, you might have to rekindle some of those relationships with bankers you haven't seen in a while. But sector-wide, we're seeing that interest in borrowing really tick up. Kansas City Fed released some data not too long ago that showed that year-on-year volumes of operating lines of credit are up 14%, and that's the biggest annual increase in over 3 decades. So it's really been an about face from where we've been in the last couple of years. But just know that this is, you're in good company, and this is part of the cycle. And like I said, we've got some committed colleagues here at Rabobank that are looking forward to helping everyone through this and into greener pastures, so to speak.
Well, again, that report, Tightening the Corn Belt, How U.S. Farmers Adjust Input Spending When Commodity Prices Fall. You can find it at research.rabobank.com. And with that, Owen Wagner with Rabobank, appreciate you joining us here on the program today. We'll look forward to talking to you again real soon.
Yeah, thank you, Jesse. Take care.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.